This is not financial advice. I just a bunch of other myths, baby, because it's about to get hot in the kitchen, family. Make sure you talk to a licensed financial advisor in your area. Investing carries risk. Even though your licensed financial advisor is very unlikely to have told you about a Google call option that made over $1,500 and got up to $1,900 in straight profit, family. This happened in literally one day. You got to learn the skills that could pay the bills. I encourage you to learn. And this is why I make these videos. However, this was the last play that I did today. That was the last one of my winning streak. I won about 9 straight in a row. I'm talking about week in and week out. And then I lost $150, which has ended the winning streak. So now I'm back on another streak where I just won another small trade. And that one was like $17 right over here. We keep it real. I don't know about the other channels. And now I had to take a small win so I could start another winning streak. And I'm going to build it up further and further and get back up to those thousands of dollars of wins. Let's talk about what's going on, because I told you in a previous video, they're trying to take everybody's job. I'm not saying this to scare you. I'm saying this to prepare you. You remember back in the day, let's call it 2023, when UPS said that they were going to give drivers $170,000 in pay and benefits following a union deal? That was the beginning of the story. What's going on now? UPS said that they're going to cut 48,000 jobs and restructure the company. Isn't it funny how these jobs are sending out all of these promises and they're telling you, we're going to be spending all of this money on y'all. And next thing you know, they turn around and cut like it's crazy, right? Interesting. But the people at the top, the people who own the companies, the people who are the owner of things are the ones who are making money. Let's look at this one. Amazon is at it too. They said that everyone thinks AI is replacing the factory workers, but Amazon's layoffs show that it's coming for the middle management first. And they said down here that Amazon announced on Tuesday that it will cut roughly 14,000 corporate jobs, and that's about 4% of its white collar workforce. But on the same exact announcement, they just said that their sales is up to $180 billion, $3 billion more than they expected. The earnings is up about 10 to 20% higher than they expected. And then the sales is up over $1 billion more than they expected. So family, what's going on with this? This means that the company is getting more money, but they're cutting people out of it. They are cutting the people that are working for them out of it. But don't think that Amazon is just being evil or UPS is just being evil. It's the way that the country works, and it's the way that business works even across the entire world, where the people who own it are the ones who always win in the end. The people who are working in 9 to 5 and they're clocking in and they've been working on Amazon, I'm talking about from day one. Guess what? You will get let go if they can make money by letting you go and replacing you with artificial intelligence or replacing you with an actual robot that can show up and do your job in the factory. So when you look at Amazon, you can see it pumping up to the moon. And guess who likes that? Keen and Grace. Guess why? I don't work at Amazon, so I got to worry about that, but I own Amazon stock. So what does that mean? That means I got to trade with the chart and not with my heart. I hate to hear that people are losing their job. And I know hate is a strong word, family, but it is what it is. I don't want to hear that people are losing their job, but I know that we cannot stop it when these companies are making these choices. But what we can do is choose to be owners of things that grow. In Amazon, if you look at one of my portfolios, I just officially hit another home run on Amazon, meaning if you look at the bottom, my total return is 109%, aka I'm up $12,000 on this, and $1,300 of that one is just today. And what did I do? Over time in this account, I just been buying a little bit here, a little bit there. I set it on autopilot. I don't think about it. And now it has 96 shares. So I encourage you to invest into things that you know, like, and use. I know Amazon. I like Amazon. I just ordered a new phone case off of Amazon and I'm using it. I'm a Prime member. So then I said, if I'm gonna be spending money on Amazon, I might as well own some of it. I know Christmas is coming up. I already know what time it is. So then I'm making money with it, especially in an environment where I can't trust the government, which has been the history of my entire life, where I can't trust the government to make decisions that are gonna help me. And then I'm hearing things like this, what Trump and Xi did and did not agree on upon their meeting. So if you didn't know, President Trump and President Xi, China and the United States, they had a meeting. They were talking about NVIDIA. They were talking about tariffs. They were talking about many different things involving the economy and world trade. And guess what? They left there empty-handed, both of them, and they're both upset and mad. And now they got to show their country that they are going to act strong rather than give in to the other person so they don't appear weak. This is how it's looking right now. So who gets to lose out? These companies are going to lose money because of tariffs, and they're going to let more people go. but the owners are going to be the ones to make a lot. Here's a company that recently came down that I'm looking at as well. For those of you who are wondering, Amazon. If you were considering buying Amazon stock, but you're thinking it already ran up, remember, if you bought some at 240 and then it came down to 220 and you bought it here and you bought it there, your average would be right in the middle. If it kept coming down and you kept buying into it, then you would be averaging down, which is okay in the stock market because you are increasing your ownership of Amazon. In my opinion, that's what I'm going to keep on doing. Another one I want you to look at, which already dropped it like it was hot, but we want to see where it lands, is Meta, ticker symbol META, aka Facebook, aka Instagram, aka WhatsApp. This is a company that when it came down to the 400s, I was basically getting on here and telling everybody this is the one right here. It jumped all the way up to about 650. It went past 650. It got to 750. I'm like, okay, you see me slow down with the videos on it, but I was still willing to hold on to it. But now that it's coming back down, I'm interested in it again. So I'm interested in holding this one long term. Amazon's long term. Meta is long term. This is why Meta, when you look at the PE for a tech stock, generally around 30 is decent for a modern tech stock. The PE of this one is 29, which is comparable to the industry now. Once Meta got up to $750 a share, it was getting a little expensive and I didn't necessarily want it up there, but I do want it down here and even lower. So I want to see where it goes. Now, I'm telling you this, at your 670s, I'm willing to bite and take some here. If it comes down to even 600, I'm willing to go even heavier on this because I'm not worried about something like a Meta long term. I see this going to your 800s or 850s. Here's another one I want to put on your radar, which have their earnings coming up in a few days, and it's AMD. AMD has dropped down to about 256 at the time of this recording. This is a tech stock like your Nvidias, for example. And AMD has been beating their earnings again and again and again. You can see these two lines right here. The orange line is what they expected. Every time that blue line is higher, they doing better than what they expected. We like to see that. We like to see that a lot because it's telling us that this company is performing and it's performing better than Wall Street expects and even what they expected. So we look at the balance sheet. Do they have assets and do they have liabilities? Do they have debt? When you look at these two bars, you see all of them. The big bar is how many assets they have. So they got a lot of things that are making them money. And then the little tiny bar is the debt. They got a little bit of debt in there, but all of these companies have debt. But this one has a small amount of debt compared to the assets that they have. This company is making money like crazy. So all three of these, your Amazons, your Metas, and your AMDs, your boy Keenan Grace, see these as long-term plays. I love y'all. I appreciate y'all. If you do not have an app to trade on, you already know what time it is. Use the link in the top of the description, get you some free stocks and get up on these tools, family. I'll see y'all in the next one, and let's get busy. I told y'all this week was going to get crazy. And if you made any money with any stocks, let us know in the comments so you can inspire others, family. People need to know. I'll see y'all in the next one, and take care.